This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices slipped on Thursday as investors hesitated to take new positions after U.S. President Donald Trump gave mixed signals on the country's potential involvement in the ongoing Israel-Iran conflict. Brent crude futures fell 37 cents, or 0.48%, to $76.33 a barrel by 0110 GMT after gaining 0.3% in the previous session marked by high volatility, with prices falling as much as 2.7%. U.S. West Texas Intermediate crude for July fell 28 cents, or 0.37% to $74.86 a barrel, after settling up 0.4% in the previous despite dropping by as much as 2.4%.
U.S. crude oil stockpiles fell sharply last week, posting their largest decline in a year, while gasoline and distillate inventories rose, the Energy Information Administration said on Wednesday. Crude inventories fell by 11.5 million barrels to 420.9 million barrels in the week ending June 13, the AIA said, compared with analysts' expectations in a Reuters poll for a 1.8 million barrel draw. Crude stocks at the Cushing, Oklahoma, delivery hub fell by 995,000 barrels, the EIA said.
Moving on to the top news in the energy sector.
Russia increased gasoline exports by railway by a quarter year-on-year between January and May to around 2.51 million metric tons on an easing fuel embargo, two market sources said, and Reuters calculations showed. Russia imposed a ban on gasoline exports from March 2024 to offset excessive demand for petroleum products and to stabilize prices in the domestic market. Exceptions were made for fuel supplied under intergovernmental agreements, including with members of the Moscow-led Eurasian Economic Union.
India's clean industrial projects pipeline worth $89 billion is facing financing bottlenecks as only one project has reached a final investment decision in the past 6 months, a report by a Clean Industry Alliance showed. The South Asian nation has 41 clean industry projects spanning green ammonia, hydrogen production and sustainable aviation fuels, yet faces challenges in converting announcements into operational facilities, the report by Mission Possible Partnership and Industrial Transition Accelerator said. India's clean industry projects have secured $13 billion in committed investment, far below China's $61 billion and the United States' $54 billion, according to the report. Next, we have the top news in metal markets. Premiums for consumers buying aluminium on the physical market in the United States fell more than 7% on Wednesday as traders speculated that U.S. import tariffs on shipments from Canada could be cut, metal industry sources said. Canadian Prime Minister Mark Carney said on Monday that he agreed with President Donald Trump that their two nations should try to wrap up a new economic and security deal within 30 days. Consumers buying aluminium on the physical market in the United States pay the price on the London Metal Exchange plus a physical market premium that covers costs including freight and taxes.
Gold prices gained on Thursday as the Iran-Israel conflict entered its 7th day, while platinum rose to a more than 10-year high on expectations of a supply shortfall. Spot gold was up 0.1% at $3,371.15 an ounce, as of 0526 GMT. U.S. gold futures fell 0.6% to $3,388.60. Gold has made a modest bounce as we await the next steps in the Israel-Iran conflict. If the U.S. does decide to get directly involved, this could raise the geopolitical stakes, KCM Trade Chief Market Analyst Tim Waterer said.
We will now look at the top news in the agricultural sector.
Indian refiners cancelled orders for 65,000 metric tons of crude palm oil, CPO, scheduled for delivery from July to September following a sudden surge in benchmark Malaysian prices, 4 trade sources told Reuters. Refiners in the world's largest palm oil importer cancelled the orders in the past 3 days after Malaysian palm oil futures rose more than 6%, hedging their risk against the prospect of falling prices by locking in a profit. There is a lot of volatility in the market. There was more margin in cancelling bought CPO than in importing, refining, and selling refined palm oil in the local market, said an Indian buyer who operates a refinery on the west coast and cancelled shipments for July delivery.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.